We are live and with the Holy Macro Show today. So much stuff going on, and the markets are literally just jumping around like crazy. Everybody continues to freak out every step of the way. Let's get this to the slideshow, get this to the right spot. Sorry about that. We're talking about what we're going to talk about today. So you guys get a preview of all the charts. But so many people are talking about these, silver. Oh my gosh, it's so volatile. It went up and down. Yes, that's what every single thing you're ever going to own will do. And most of the time they're going to frustrate you and drive you crazy at certain points. Every good trade's going to do that. Not to mention, like, we're at a major resistance zone for silver. Makes sense that there'd be some digestion around this point. Um, Maybe it just rips right out of here. Commodities don't tend to understand resistance and support like stocks do. Um, Commodities sometimes just rip right through those levels and don't look back. I think silver could be one of those. But once again, there's nothing wrong with some consolidation here. I think that actually would be good for silver. You guys have seen me pull up this chart before, long-term quarterly silver chart. This goes back to the 1980 peak all the way to that big move that happened in the 70s. Silver went from, what was it, 50 cents or 10 cents? Do you remember the exact number, Kashop?
Not really.
Yeah, it was like something crazy where it's like 10 cents to $50. I mean, I that's all I remember. It's like it's something insane. Um, so it basically goes from 15, 25 cents all the way to $50. One of the biggest commodity moves in history. And then it basically digests that until 2008, or sorry, 2011 was that peak. And then we got above that zone, and then we didn't look back. So I think the biggest thing that we have to continue to watch out for here is, is this move going to continue? I absolutely think so. I think that, a lot of people are looking at this and going, well, this has to stop. Parabolic moves. This thing has moved so much. This has done this and that and the other thing. Gold miners, they've made so much money. They got to stop at some point. You don't know when anything will stop in the markets, and the reason why I bring this up is looking at the outlier trades is so important as a trader. Finding these trades that only happen once in a great while, like if you would have made that move in 71 all the way to 80, like you basically made your fortune, like right there, one trade. And I'm not saying like we're going to find a bunch of those, but I'm saying like finding something around those levels that makes a big move, that's something you can participate in to the upside, make a lot of money very quickly. Like that's the type of trades you want to take. So this is why we take, for myself and my portfolio at Against All Odds Research, I take so many trades. And the reason is not so many trades as in I'm an over trader. I'm just a person who, if I have the signal, I'm going to take the trade. I don't know which trade is going to look like this. I don't know what, Bitcoin's going to go from, $50 all the way to 20,000 in 2015 to 2017. I don't know when lumber is going to make a 3x move in a few months. I don't know that feeder cattle is going to never have a down month for, basically an entire year. You can't know any of these things. You can't know the VIX is going to go from 12 all the way to 60. These trades happen so quickly and so infrequently that you have to kind of just take the move and either use a trailing stop, figure out a way to exit, however you're going to do it, and let that thing run. And I think silver is kind of just saying the same thing, which is you're letting it run. Like I couldn't have predicted the gold miner. Like if you'd have told me the GDX would be up 130% this year, I would have never thought that was possible. I think it can happen, but thinking that, this year with this environment, it was going to happen in that way, I couldn't have thought that. I would have thought, yeah, it could make a big move this year, maybe 50%. I would be very impressed with a 50% year from GDX. 130, that's an outlier. So the reason why I bring that up is we have to continue to take these outlier trades, continue to buy these major breakout zones, whatever it is, and continue to look at what's next, because that's how we're going to make money in this cycle. It's not going to be doing the same thing that everybody else is doing. So Kashop, What are you thinking about silver? So many people have been talking about it, the big move in silver, how amazing it's been. How terrible it is now because now it's hitting resistance, it's going to crash, and all the precious metals are done at this moment. Same with gold. I can't believe it's moved so much. That has to stop. $4,000. What are you thinking about gold, silver, and what do you think the macro implications are of these? Like, what does it mean that gold is all the way up here and silver's all the way up here as well?
So you can look at the chart and you can see a parabolic move and be like, oh, this is overdone. This is, ridiculous and all that. Or you can look at the fundamentals. So what is driving this rally in gold? What is driving this rally in silver? And if you look at the entire metal space, you will find that it is not just gold that's moving or silver that's moving. Platinum's moving, palladium's moving, copper's moving. So pretty much across the space, you find all the metals moving. So now when you look at it in that context, is it really parabolic? Well, not really. The entire space is moving. So then you have to ask yourself, why is this entire space moving? And that's where you get into the fundamentals. Well, gold is moving because central banks are deallocating from US treasuries and buying more gold. So I think for the first time in history, they have more reserves in gold than in US treasuries. Now, central banks buying, are they really going to care that gold is at 4,000 or 5,000? No, they are going to care about diversifying their portfolios away from dollars and US treasuries. So then you have to look into, so why are they doing that? And then you have to look into why are other investors doing that. Then you get into the fundamentals of what's happening to the dollar and treasuries. And what's happening to the dollar and treasuries? Well, there's a whole drama with the Federal Reserve going on. So Trump wants to get his appointees into the Federal Reserve and lower rates to zero and probably start QE forever and God knows what. So when other central bankers, other institutions, all the macro traders, they all see that, what do they think? Well, if that's the end game, then we may as well front run it and start dumping treasuries, start dumping dollars, and start buying gold. And that's what they've been doing. So if you look at the dollar index, it's down around 10% year to date. And if you look at treasuries, well, treasuries have been a disaster. So the Fed started cutting rates, yields started going up. So you do not see this kind of divergence often. So what does it tell you? It tells you that investors have lost confidence in the Fed, lost confidence in Trump, the dollar, everything. So what are they doing? They are bidding up gold. Now, when gold goes up, what happens next? So the typical buyer of gold, the marginal buyer of gold, cannot buy gold anymore. So what do? They go to silver. And I'm from India and I see this in India. So economists in India are predicting that silver jewelry with gold plating is going to be the next big thing because, well, no one can afford to buy gold anymore, which is true. So why is silver moving? It's moving because of these factors. And gold and silver, they are kind of connected. So there's a gold silver ratio. Whenever it gets out of whack, you kind of see silver reprice to correct that. So that's what's happening. Why is copper moving? Well, copper has been hit with supply shocks for a really, really long time, starting with Cobre Panama in Panama, which got shut down. It was like 1.5%, 2% of copper supply, and then on and on and on. So Ivanhoe Mines had a earthquake issue, and then Freeport had a mudslide at its Indonesian mine, and there are just like so many production shutdowns, and Teck is having problems at its QB2 project in Chile. So you have all these issues which are sending copper higher. And then if you look at platinum, palladium, well, where do they come from? They come from Russia, they come from South Africa, they come from Zimbabwe. And there are obvious issues and challenges in those jurisdictions. So those are moving. So you look on and on and on, and then you take a look at the rare earth space. The rare earth space is like gone absolutely bonkers because China has said that if a Chinese product has even 0.1% rare earths, they need to get a special license in order to export it to the US. So they are clamping down hard on rare earth supplies to the US. So the US is panicking and it is taking stakes in mining companies. So when you see this happen, what does it tell you? Central banks are buying gold fine, but you look at catalysts across the board, this is a commodity bull market. Though then you go back in history and look at previous commodity bull markets. How long did they last? Well, they lasted close to 20 years. And we are probably in the second or third year of a commodity bull market now. So How much longer can this run? A really long time. So when you frame it in this context, you don't just look at a parabolic daily chart and say, oh, this is done. You look at it in the long term context and you say, oh, this is just the beginning. Now, of course, if you are a day trader or if you're, trading the 1 hour charts or the 1 minute candles and stuff, then, what I'm saying doesn't really apply to you. If you are a swing trader, then a part of it applies to you because you want to play the corrections as well as the trend. So, you want to do a trend following plus a mean reversion strategy. If you're a family office or if you're a large institutional investor or a, big pension fund manager, you don't really care about the dips. You just want to keep allocating to a trend which you know is going to last a long time. Now, these trends are rare. It is not often that you can find such massive commodity bull markets. So when you find it, it doesn't really matter if you're getting in on year one or year two or year three, because this is going to continue for a long time. And if you have that time horizon, then this is still the perfect time to buy. If you have a shorter time horizon, then you need to wait for the dips, you need to wait for the corrections, you need to wait for, oh, silver's at $50, it's at a historic high, it's done. Oh, look at this, this is a breakdown, like let's short silver. So yesterday, the fee for shorting the SLV ETF was 12%, and I checked on Interactive Brokers, there was zero shares available to short. So that's the kind of short interest that's going on. So today in London, I think the fee rate is something like 39%. So it's crazy. Everyone wants to short this, but if you look at it in the larger context, no, you should not be shorting this because you're probably just in the second year of the market, the bull market.
Yeah, I think it's, when we look at these markets, and this is the biggest thing I was trying to say earlier about the outlier trades, which are, Kashop has seen me trade a lot of these different markets over the years. There was a point, I think it was 2020, if I asked everybody, what was my best trade in 2020, thinking of futures markets, nobody would those. And then if you look at I think the next year it was like European power, like it was either Germany or Dutch or some, I can't remember which one it
And
was.
canola.
Yeah,
You
and
had a big
canola.
canola
Yeah, I
trade.
forgot about that. Yeah, canola was number 3. It was like the Euro utility markets and then canola oil. And so the biggest lesson that I've learned in trading over the years, and if you ask like a new trader this stuff, if you say I didn't know where my biggest winner will come from, they might say something like, oh, I knew the VIX would move the most or something. Like that might sound smart to some people. However, when we're looking at these markets and we're going, okay, gold right now, I have a chart actually here. Let's just get to it. I'm going to skip a bunch of stuff, but I want to get to this because it's important for what we're talking about. Gold is the lowest risk adjusted return in the portfolio at the moment. Now, what that means is gold has one of the largest positions in my portfolio. The largest is the bond short still, because that's the most lowest volatility, even lower than gold. But gold has very low volatility for what it is and how big it's moved. You get a 50% move in something like gold, and you have it as one of the largest positions in your portfolio. That could be one of the biggest winners of the year. So understanding that fact can also really matter. It's kind of like the VIX. Like, yeah, the VIX could move. I could have a long position in the VIX. It could move, let's say, 500% in a few weeks. But that's going to be one of the smallest positions in my portfolio. Like if it's the biggest position and we're looking at this thing can either go down, 50% or up 500% very quickly. That's going to be a very small position in the portfolio. Same with something like Bitcoin is going to be a smaller position. And none of these have to do with conviction. I think a lot of people think everything for traders is based on conviction. You read George Soros and you talk about Druckenmiller, and they're talking about being pigs and being greedy and conviction and so on. If you really look at those positions in their portfolios, one, to their stop, they would possibly lose 3% of their overall portfolio on these positions that you think they're putting their whole portfolio into. New traders hear that stuff and they go, okay, well, I really, really like gold here. And let's just buy, let's take my portfolio. 100% of the portfolio is going to go in call options on GLD. and that's gonna basically blow you up unless either you're the smartest person in the world in your head, um, which as a new trader, like when you're making money, you think you're really smart, or you're the dumbest person in the world and you blow up very quickly. And I'm not making fun of anybody. This is how I traded at the beginning. I think everybody does at the beginning, where you're like, okay, well, conviction matters so much. What I'm telling you is that volatility matters a lot more, because the only way you really make money in the long run is by limiting your drawdowns. If you're down 50% every few months, you have to make 100% every time to get out of that drawdown. That's really tough to do. But if you can limit your drawdowns, not even anything too small, because that will cut your returns, but something 20%, limiting your drawdowns to about 20%, 30% on your worst drawdowns, you're going to do great in the long run, because you can make it out of those drawdowns pretty easily. It's not going to kill you to be down 20%, on your at your worst. So I think that's the biggest idea you have to think about here is how to understand the volatility of each product you're trading. And gold, looking at it, like, now this is an insane run in gold. Don't get me wrong. Gold is not very volatile. It's one of the least volatile commodities out there. If you look at something like natural gas, the most volatile commodity out there, a trailing stop could be something like 30%. This thing will jump around. It could go down 30% within an uptrend pretty easily. Something like gold, most of the time, 15% was where the trailing stop was in most of the uptrends most of these years. Now it's like 13%. I'm still a little bit wider than that. I'm at 16% right now. I would like to give them a little bit more room to breathe. But like the biggest drawdown for a 50% return this year is 10%. I mean, that's insane. So once again, it's a understanding, like, your positions are going to be bigger in these lower volatility assets. And then when they really move, like let's say you have a gold contract in futures, a full size one, you're talking 300,000, 400 now, I think. So if you have those big contracts, you're going to make a lot of money very quickly. And you're also going to have smaller drawdowns and not get blasted by every pullback, because the pullbacks aren't going to be 30% like a natural gas. So I think that this is another important thing in understanding outlier trades, because some people look at gold trades for us and be like, wow, gold's really boring. And I'll be like, well, if you have a shit ton of leverage, it's pretty awesome. And it's the same with bond trading. Like people are like, oh man, bond trading, like, yeah, I want to make 5% in a short-term bond. Like, no, like if you have the amount of leverage that we do on futures contracts, you can make a ridiculous amount of money. But it's all based on this last chart, which is understanding the volatility of each position. Kashop, Sam brought this the other day. I mean, man, Sam's got to be the smartest 20-year-old I've ever met in my life. Like, I swear to God, that kid's always bringing impressive shit. But he found this from, I think it's from B of A, and he brought it the other day on one of the shows we had. And I was just, looking at this, just floored, like, man, look at, the lowest volatility things, risk adjusted returns. Like, would you ever think emerging markets would be at the top of this list? Would you ever think gold would be at the top of this list? Like, gold being up there makes sense, but like emerging markets, and here's a good way of thinking about this, guys. And I'll move on after this. Bitcoin is up was up 29% when this was released. So 29%, that's the total return. Is Bitcoin number 3 over here? No. So where's Bitcoin? And it's right here. It's all the way down there below the S&P 500 and the NASDAQ. So why is Bitcoin all the way down there? Because Bitcoin has had 30% drawdowns in the same period of time that gold's had 10% drawdown. So the risk-adjusted return for gold is going to be higher, because you're going to have lower risk and more reward. And then Bitcoin's going to have higher risk and lower reward. So lesson here today. Didn't really want to get too into the weeds on that, but I was talking about the subject and I thought you guys would find that interesting. Any thoughts on that, Kashop?
So, Bitcoin in general, I would just say avoid it right now. And we covered it in the last call. And the reason is, like you point out, the risk adjusted return is kind of terrible. And the reason it's terrible is, well, because so here's the thing. So there were times where we used to trade Bitcoin and it would have 25% down days and no one would care. But now that it's an institutionalized asset and metrics like volatility matter, it's not really as attractive as it used to be. And mainly because now it's a margined asset and it's all kinds of stuff because it's in portfolios, it's in retirement accounts, it's in, IBIT is the high fastest growing ETF of all time, beating GLD, which was launched in 2006. So when you get a product moving from one kind of holders to another, you're going to find metrics like this start to matter. And so if you're the old school type of trader who just wants to have Bitcoin and use it as a currency, use the actual network, it's not really working anymore. But yeah, if you're treating it as a financial product, then it kind of works, but not really, because you're better off allocating to something like you said. I mean, emerging markets having a better risk adjusted return than Bitcoin, never would have imagined it, but here we are today. So in this scenario, I would just say avoid Bitcoin altogether and go on to other things. It's too overhyped. It's not really worth your time, not really worth your investment dollars. There are better trades out there.
And I go back to where I was at step one, which is I don't know what's going to be the best trade in the portfolio. It could be Kashab could say that, and I could actually agree with him completely, and then Bitcoin could be the one that just skyrockets. So I'm just saying it's in an uptrend for me, and like once again, that's where my analysis really is. Always, it's in an uptrend. Kashab is much better at understanding the underlying fundamentals for each of these things, but I do think that understanding that the cycle that you're talking about, Kashop, which is moving out of treasuries, moving out of dollars, it should benefit something like Bitcoin. But I am in agreement with if you're torn between the two, like where do you go? And I would still probably go precious metals if you're torn between the two. I have both positions. That's the way I usually trade. I'm just going to have a wide berth. But if you're got to pick one, I definitely go with precious metals. I hear a lot of people talking about alts, and my buddy Mark was talking about this. Mark Stein, he has a cool page. He's talking about oil going up and so on. We were talking about the fact that everybody's looking at alt season, and he was like, well, when we're looking at alt season, people aren't looking at like the junior miners. People aren't looking at the explorer stocks and thinking the same thing. And like that's true. It's like the exploration stocks are probably going to be the ones where you're going to make a lot of money, and people are going to just kind of glance over that and go back to the altcoin phase and buying Fartcoin or whatever crap is out there today that I mean, I know people trade them. That's great. I don't touch any of them. I have no idea where I'd even start. And that's not something to say like I'm ignorant of that, of the crypto space. Like Kashop and I have been in the crypto space for a very long time, probably longer than most of the traders who trade in the crypto space have been trading. And that's the truth. But I know watching, I think I probably have PTSD from 2017, honestly. Like here's a good way to think about it. 2017 Kashop and I would have been in the Bitcoin trade, and I think you probably owned a bunch of different coins. I owned a bunch of different coins at that time, but I also watched friends of mine start to get into these like Datacoin and all these ICOs that were coming out at the time. I think that was the highest ICO time ever. Maybe we've overtaken that recently, I don't know, but there was a lot of ICOs at the time, and they all went to zero. And I'd have buddies of mine sending me like screenshots like years later of the ICOs they bought, like laughing about like, oh yeah, I bought $100,000 of this ICO. Look, it's zero. It's 20 cents, but I can't even sell it for 20 cents, and like laughing about it. I'm like, I don't want to be there. Like I don't know enough about that space to really mess with it. And like, yeah, you want to take a speculative bet, whatever, go for it. But just for me, like I'd rather kind of stay away from it and move on. And there's going to be some speculative bets in the mining space as well. but most of the time it's not going to be something that's so illiquid that you can't even get out of it, and you'd have to sell it for zero. You'd probably sell it for maybe 50% down. Maybe you have a trailing stop on it. There's a bunch of things to do, but an ICO, that thing can go straight to zero and then you're screwed. And it could also look like it's worth money, but it's also not worth anything because nobody's willing to buy it. So I kind of stay away from the space. So I agree, like the explorers are the way to go. But let's bring up some other stuff here. Oops, wrong one. Man, there's so many options now. I'm just messing them all up. All right, here we go. So XME, Kashop. This is one thing that I'm going to run through kind of quickly, and then we'll hop into China. But looking at these bases, there's so many bases that are breaking out right now and starting to move higher, and so many people are just not thinking about this the right way. They're going, okay, well, yeah, metals. Somebody told me, the one day they were talking about energy, and they were like, yeah, energy, it's just a bad investment. Look at it over the last 20 years, and I'm just like, what are you Are you a trader or are you not a trader? If you're not a trader, sure, that makes some form of sense. If you're a trader, like, no, you want to be rotating through these sectors, like what's moving. Okay, I'm going to get into that one and then move to the next one. So when we look at steel, steel's another one. We just saw a breakout here. So this is just sustaining. This is a chart from today. So we're sustaining above that level. We're at 75.31, above 74.81. I'm bullish on this space, but I see this just moving. It's not even to say like, hey, go buy steel stocks. It's more to say like we're seeing this throughout all of these sectors at the moment. Rick sent me Ricardo at Null Charts. He sent me a thing of he made an index of aluminum stocks. Aluminum stocks are all breaking out. I actually bought an aluminum stock this week. I can't tell you the last time I bought an aluminum stock. Small caps are starting to break out to the upside. We're seeing that massive breakout that we haven't really hit a new level in small caps in, I think it's been like 5 years, 5 years. I want to say this was a new high here. Yeah, because this was that triple top that was after COVID. And then this was a new high here. And now we've just been struggling around that level since 2021. Now we're breaking out to the upside. Another thing to look at, small caps. So, and the next thing, and then we can hop into China, which is emerging markets. So emerging markets, this is a massive base. So this is going back to that big move. And a lot of people forget this. And this is what Kashop and I are always talking about. We're talking about history. We're talking about moves that have happened. We're talking about the fact that, like, if you go through the cycles, you always see these things ebb and flow. Meaning sometimes emerging markets are leading the way and U.S. stocks are the laggard. Other times, U.S. stocks are leading the way and emerging markets are the laggard. If we go back to 2000, we saw this massive move in emerging markets. I want to say China was up 300%, Latin America up over 600%. Some of these countries were up 700, 800, 1000% during that time in the 2000s. And the U.S. was up 70% during that same amount of time. So your money was treated better in these emerging markets. We've been seeing this big move all year long, but we haven't really seen that breakout happen. So if we get that breakout, which we've seen in a lot of countries, Europe's breaking out. If we look at basically every country in Europe is breaking out to the upside and making new highs. So it's probably going to start happening in, Southeast Asia, probably Latin America. There's a lot of things that we're all looking at here. But I do think that we're going to see this happen, and that's going to be a major move that's just going to continue. And I don't think it's stopping. I think the international trade's probably here to stay. So, Kashop, I wanted to bring this to you, and you had a couple things. We're going to talk about China a little bit here. So China, Malaysia set to hold joint military drill in October. So when I see stuff like this, I get pretty bullish on the fact that anybody involved with China is probably going to be a country that's probably going to start making some money. Their economy is probably going to start picking up and so on. So looking at this, I was like, okay, I want to bring this to Kashop today. I'm looking at some Malaysian stocks. then Malaysia has been one of the underperformers in the country indexes this year. But I wouldn't be surprised to see it start picking up on news like this. Have you looked into Malaysia stocks at all? Do you know anything about it? And
No.
also, what do you think about this situation? Just blanket, what do you think about a situation where we're talking about countries working with China?
So Malaysian stocks, not a clue, honestly. And as for this drill, I think this is significant because China had this maritime map, which they call the nine dash line, and that's been a source of contention with all their neighbors. So Vietnam, Philippines, all the Southeast Asian neighbors. So it was kind of a way for them to claim territory in the South China Sea so that, future oil finds or defense or anything, they can say that it's not international waters, it's Chinese waters. So this has been going on for a long time. So if China and Malaysia are kind of thawing relations, that's a good sign that China is getting closer to its Asian partners. And if you look at what's happening with China-US relations, it kind of makes sense, the geopolitical chessboard kind of way that China is actually pivoting away from US or trying to curb US influence in the region and take the baton on being the superpower in the East. So uh, I think that's what's happening. It's nice to see, and it's nice to see because the way Trump is doing things, he's not making friends anywhere in the world. I don't think he's even making friends in the US. Like people are asking me, like, are they really bringing in the army into Washington? Like it sounds like a Bruce Willis movie where there was a movie where that actually happened. Like they put people in concentration camps and forgot the name of the movie, but kind of brings to mind situations like that. So it's good to see China stepping up because we need someone to balance out the powers. Otherwise, you're not going to have a multipolar world. And if you don't have a multipolar world, then one country dominates, sets policy for everyone. That's never good for the world.
Yeah, I think it's it's an interesting time we're living in. I think that what we're going to continue to see is these countries start working with China. They start trading with China, and we start to see growth there as well. Because look, if we're looking at this is something I talked about with Kevin Muir when I saw him in person. Had a great conversation, but we talked about emerging markets and seeing all this growth in the emerging markets. And he said, "Well, is the U.S. really growing?" And I said, what do you mean? And he said, well, with emerging markets growing so much, I feel like they're just dragging the US kind of with it at the moment. And I think that's true. And tariffs could change that pretty drastically, pretty quickly. I'm not a fan of tariffs. I don't think they're a great economic policy. I don't think any economist even thinks they are good for the economy. So, seeing that happen and seeing the emerging markets continue to pick up, thrive, create new partnerships, I think that's where your money wants to go. And once again, there's going to be people on here like, oh my God, that's so anti-American. It's like, it's not anti. Guess what we did in America? We brought everybody here. And then we started a capitalist country, which is fantastic. And we make money. Like nobody would, people have partnered. I mean, we created the Trading with the Enemy Act and so on. Like, why did we do that during World War II? Well, Henry Ford, was basically selling to both sides. We basically had there was Ford tanks all the way in Germany. Hitler also had a life-size picture of Henry Ford in his office. There's a bunch of companies. IG Farben, which is a Rockefeller company, which is one who made the gas to gas the Jews in the concentration camps. I mean, like we made a lot of stuff here and sold it all over the world. And investing in these different countries to make money is just, hey, our money's going to be safer here, treated better here during that time. None of us on here, I mean, unless you're running billions of dollars, have enough to buy Malaysian stocks and change Malaysia's future. So they can start, a war with us or something, like we're traders. One, I'm going to probably trade it for a year. It might buy a few shares of each of these companies and boost them for a little while or something if everybody gets into it. But there's not going to be enough investment to really change their future. We're just talking about how to trade these things, how to make money over time. But yeah, so getting into this next one, it's another one you brought.
So I just wanted to point out that like everyone's going nuts over like there was a Circle IPO in the US. Everyone went nuts over it. Stock went from $60 to $300 or something like that. And then you saw the same with the CoreWeave IPO. You're seeing it pretty much across the board with IPOs. But this is the first time that we are actually seeing it with a gold IPO. And I think that's significant. And it's also significant that the venue is not the US, but Hong Kong. So it's just something I want to show people that you can make tech like returns in the gold space. You can make these kind of momentum driven, you can trade these momentum driven moves outside tech, outside US. You can do it in commodities, you can do it in gold. And not to brag or anything, but I had my first 10 bagger for this mining cycle yesterday. It was a brief, uh, you know, went up to 950% or something, and now it's gone back down to something like 850%. But I mean, it's possible, and it doesn't really take much time. If you play the cycles, if you are in tune with the news, you can catch these moves elsewhere. And that's also the other thing. So I think US is probably heading for a stock market correction, crash, recession, whatever. And in that situation, everyone's like, do you have to be in cash? What's the solution and all that? And well, there's always a bull market somewhere. So if you can keep your nose to the ground and you can find these moves, then you can play these trends in other parts of the world. And it's pretty easy now. So if you have an Interactive Brokers account, opening up, buying a stock in Hong Kong is as easy as buying a stock in the US. So there's really no excuse not to be internationally diversified now.
Yeah, I think that's a thing that so many traders miss, which is the simple idea that we should invest in different asset classes. Like it's a simple idea, but for some reason it still gets a lot of pushback. Like if you look at my portfolio, it's all over the place. There's not you couldn't look at it and say, "Oh, Jason trades tech stocks. So Jason's this type of trader." It's everything because there's something moving everywhere at certain times. So if we look at, and it's all really the same trade to me. If we look at the bond short, we look at, live cattle being long, we look at gold being long, silver being on the long side, the international stocks, the currency longs I have. It's all one trade, really, which is a weak dollar cycle, commodities starting to move higher, a move out of U.S. assets into international assets. So there's a bunch of things that you could surmise from my portfolio, but that's really the truth, which is it's all one trade. And the more you're able to look at these different asset classes and trade across them, the more money you're going to make because things move at different times. We talk about 2021 all the time on here, which is the time where technology lagged and the metals and mining, the energy sector was a massive outperformer. You just want to switch from these sectors, asset classes, and so on, and you're going to make a lot more money than the next guy who's stuck and going, "Hey, I really have to be long technology stocks, or I really like this. I'm a tech trader. I'm this type of trader. Like I'm a trader. I trade anything. Put me in the middle of Asia. I'll find some random gold mine to buy and probably have the guy disappear on me after he pays me a couple bucks. That's actually a true story. But things like that happen. And it's because when you trade, you want to trade everything all over the place. And you want to be open to the next move and not be stuck in the fact, well, hey, I like investing in US stocks. Hey, I really like technology. Even, hey, I really love gold. There's going to be a point where we're going to go, hey, gold's made its move. It's probably not a great time for gold, and we'll probably be in something else at that point. This is all going to happen. So I want to also make sure we have time to get to the yen and Japan today. People are also asking a lot about potash. They're also asking a lot about fertilizer stocks. I have some extra time today, so we can go on a little longer if you have time, Kishap. But I want to also hit this. So Kenya converts 3.5 billion loans from China into yuan to cut interest, and then China hit back at U.S. ships with additional port fees. So what are we looking at here, Kashap?
So we're looking at China flexing in terms of both adoption of their currency and in terms of showing the world that they will not unilaterally bow down to Trump's actions. So what we saw with the European Commission, the EU, is whatever Trump said, they are just like, yes, 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 we'll just implement all of it, we'll not push back or anything. And what we are seeing with China is calculated moves in every angle to diminish US influence. So uh, first with the economic hitman plan. So there's a book called Confessions of an Economic Hitman, which talks about how the US used, starting from the Marshall Plan all the way, they used their loans to developing countries as a kind of club. So now China's sort of doing the same thing, and it is pushing the US out. So instead of dollar loans, now it's yuan loans. And if you look at who's financing the mines in Latin America and Africa, it is all Chinese. So jurisdictions where Western miners are not welcome, Chinese miners are more than welcome. So you're seeing this happen on the influence front. And in terms of the anti-US sentiment, you're seeing it happen so for instance, Trump said that any Chinese vessel is going to face higher docking fees on US ports. So now China has pushed back. And Trump said we are going to invade the Panama Canal because it's owned by the Chinese. And what happened was the Chinese firm, which owned quite a few ports in Panama, said that they are going to sell it out to one of the US private equity groups. And then China came and blocked it and said, unless we get these preferential deal terms, this deal will not go through. So you're seeing China flex in that sense, and it's just getting more and more aggressive. So earlier with rare earths, they said, we are not going to export rare earths, we are going to, cut down licenses. And now they have said, if your product has even 0.1% rare earths, you need a special license. And we're not going to give you that license. So they're cutting out US. And now they are doing these checks where they say NVIDIA's GPUs are not welcome here. So they are really clamping down on the smuggling and importing the legal importing of NVIDIA chips. So all of this just tells you that China's flexing. And when China starts to flex, you really need to pay attention, especially because, I mean, it's the world's number two economy, sure, but it's also a economy that people have written off. So the last China bull, I think turned off the lights and quit in 2014 after that bubble. And since then, everyone's like, who's covering China? No one's covering China. Why? Because no one cares. Because everyone remembers, oh, yeah, we lost money in that bull market. We thought Alibaba and all these companies will change the world. Turns out nothing happened. And China's been written off for 10 years. But now, if you look at the charts, which is the next slide, you will see that Chinese stocks are actually starting to perform so damn well that everyone should be paying attention. So in the US, everyone's focused on the mega caps. In China, the moves are happening in the small caps. It's also happening in the large caps, but it's really happening in the small caps. And what does it tell you? So, small caps, small companies, they are the backbone of the economy. So, you're seeing something very, very unique here in that the US is trying to punish China. China's going through a kind of debt deflation episode, and still Chinese stocks are looking up. So, we are probably in for a big, long bull market in China, and you should be paying attention. And this aligns with the commodity signal. So the last time we had a big commodity bull market, China was booming. And this time we have a big commodity bull market and China is booming. So the patterns are repeating. You should be paying attention.
No, I love that. And I think it's the trade of the year really, and probably next year, which is getting out of the United States stock market and finding other avenues. A lot of people don't even know, like, certain stocks are global stocks. Like, I think it's, Spotify, like random stocks. They think they're United States companies. Like, we think, I mean, let's be honest, people in the United States, we all think we own everything. Everything's all about us. Uh, and then, but if you look at it and you look at companies like, Ferrari, for example, that thing's been, I haven't even looked at it. That's the funny thing. I haven't even looked at that stock. I can tell you it's probably up right now. I could tell you it's probably because the Italy index is in the portfolio, and Italy's done so well, and that's got to be the biggest thing out of Italy. So I think that that's doing very well as well. So let's also hop into the yen. So I'm going to bring up a yen chart in a second, but lots happened in Japan. Can we run down that a little bit? I know you're probably way more tapped into it than I am. I know there was an election. I know it was very dovish, the person who got elected. But what are you thinking about here? Obviously, I'm probably with you thinking the yen's just they looked like crap before. It probably looks even worse now. So what do you think about this election? What do you think about Japan? Should people be getting their money out of Japan? I know you've been pretty bearish on Japan over the last year or so. What are you thinking here?
So I can see it going two ways, and that's really the problem. So the the demarcation between a big deflationary crash and hyperinflation isn't really much. It is just one shift in central bank policy. So if so the current government, the Japanese government, they want to revive Abenomics, the three arrows: print money, lower regulation, cost inflation, kind of playbook. So if they start doing that, and now everyone knows this playbook, so everyone's seen the yen go down under Abenomics. So if they start this playbook, it's 160, 200, 240, 300, there's really no limit to how much worse it can get. But at the same time, there is a lot of discontent. So Japanese now expect inflation to hit 11%. This is an economy which has had deflation for 30 years, where wages have been stagnant and standard of living has been rising. And now they are expecting 11% CPI inflation. So, in this scenario, if the government says we are just going to let the yen go and we are just going to print, 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 I don't know. I mean, it's a very, very polite society, but maybe we have a revolution in Japan if that happens. I don't know because inflation makes people do crazy things. It hurts your morality when you see inflation constantly happen. So you put a society under 11% inflation and promise of more. I don't know what happens. The alternative is they just hike interest rates, end the yen carry trade. Now, what happens if they do that? If they do that, all the people, all the Americans, the private equity firms, all the big institutional investors, all the infrastructure guys, whoever has borrowed in yen in order to fund long-term projects, they are going to be hit with a sort of margin call. And when that happens, the yen is going to strengthen massively, which puts an end to your inflationary pressures. But at the same time, all the domestic banks which lent money to these companies, to these projects, they are going to be in deep trouble. So in that situation, and of course, the government bond market is going to implode because JGBs are not priced for higher interest rates. So what are they actually going to do? So they don't have any easy choices. There is risk to both. The risk in the inflation scenario is a total societal collapse, riots kind of situation. The risk to a deflationary crash is you have a banking crisis. Now, which way the BOJ will go, which way they'll be forced to go by the rest of the world, I don't know. But I'm watching this because this really determines what happens to the world economy as well. So when Japan sneezes, the US catches a cold. So if they induce a deflationary crash in Japan and say, we will save the banks later, it doesn't matter, then US markets are going to crash. In fact, the entire world is going to have a deflationary spiral. So if that happens, then the playbook is different. If they say we are going to go with hyperinflation, then we just continue doing what we are currently doing. So I'm fine with I'm prepared for either outcomes. I'm obviously not fine with either outcome, but there's really no choice. You have to play the market that we are dealt, and I'm watching this keenly.
Yeah, I think it's I think it's significant, and I think also like it makes me think of 1987. We're gonna let the dollar slide was something that came out of the United States at that point. The market was just going crazy before that, and then all of a sudden it started to go down, and then we had a massive crash. 10% inflation is really nasty. inflation is really nasty. If you go back, there's a 1980s report that was built on the 1970s. I'll try to find it today. Maybe I'll make a post about it today. It'd be a good idea. But basically, it talks about like what happens to societies during inflationary times. Crime rates go up, murder rates go up. Everything gets worse for everybody. Drug use goes up. More people in prison. Even think of in the 80s, the crack epidemic that happened in the United States. Why did that happen during that time? Why were so many people looking for any sort of out at that point? Well, inflation was pretty rampant through the United States. Yes, people will look at it and go, 1982, inflation stopped. It's very similar today. Would you say, like, and for the normal person, 2022 inflation stopped? No, like, yeah, maybe gas prices came down a little bit. They got a little frothy there for a little bit. Everything else is exactly the same. And that's a reason why people keep saying, and the argument keeps coming up, that there is no inflation here in the United States. Um, because we're mainly weighting this in things like rent, which went up a ton and then it just kind of flattened out. So then everybody goes, okay, rent came down. Really didn't. It just flattened out. Food prices went up a lot. Then they just stopped going up. They didn't go down, but they stopped going up. Gold prices obviously up. Silver prices obviously up. Steak prices obviously up. You could go across the board in most of these commodities, and the price of them are a lot higher than they were in 2022. So what happens is you get to a point where you're like, well, what do I do to feed my family? If wages don't increase with it. So you get to a point of going, okay, well, maybe I have to do crime. Maybe you can't do anything. Maybe you feel hopeless. Maybe that leads you to doing drugs. Maybe you commit violence. Maybe you're doing more theft to make money for your family. I mean, most of the time, what I've learned through my life and going in and out of institutions is that most of the people there who are there for some really bad shit aren't really bad people. They were in a shitty situation and tried to do something. The craziest thing, the craziest thing I ever learned about going to jail. When you're in jail, if you're around a bunch of people, how many people did I meet that were there for really crazy shit? There was one serial killer there at the time, Anthony Selwell. He was very locked up by himself. Everybody else, it seemed like probably it had to be 90% of the people I met were there for suspended driver's licenses. So why would you continue to drive on a suspended license? Well, the answer is you got to feed your family. You might like a lot of them were going to work and they'd get caught. A couple guys were truck drivers and they'd get caught. And then also, like, let's say you smoke weed, let's say you do some sort of drug, they can toss your car when they pull you over. So then you get another charge. So most of the people were ended up in jail for stuff like that. So think about an inflationary environment. Everybody's trying to make money. Everybody's trying to do something. A lot of people then end up in trouble. They end up struggling. So that's something that can happen anywhere. And so looking at Japan, like they've gotten off pretty easily with what they did to their currency. Like really, like Abenomics should have been so bad, where like their economy should have blown up. Like there should have been some really crazy repercussions, but they just really didn't. But they put that off into the future. And so now here we're at a point where going, okay, if we do this again, we're going to lead to this crazy amount of inflation when we haven't had any for so long. I think you're right. I think that could turn out really bad. I think you're right about Japanese people. It'd be surprising, but it's possible.
So,
And go ahead.
yeah, when they started Abenomics in 2014, I think, the geriatric population in prisons went up. And the reason for that was because, well, inflation started and people who were living on a pension, they couldn't afford their homes anymore. They couldn't afford to pay the bills. So what did they do? They did some petty crime, got caught, went to prison where healthcare is free, food is free, and boarding and lodging is free. They would get out and they would repeat the same spiral because they were just afraid to live in society and not be able to meet the cost because there's no begging culture in Japan. So they just decided it's better to go to prison. Now it's really sad to see that old people are reduced to a situation like this. And if you have 11% inflation, we are going to be seeing a lot more of that. We are going to be seeing a lot more suicides. So there's a book called When Money Dies, I think Adam Ferguson. He talks about during the Weimar Germany hyperinflation, old people would hold hands and put their heads in the oven and turn on the gas. It's the most painless way to go because they couldn't deal with the inflationary society. And we are probably going to be seeing a lot more of these sad stories. I mean, as traders, we try not to think about the human side of it, but the policymakers don't as well. But somewhere, if you have morals, then you hear these stories and you just think, man, society is in serious decline. And why do we let these central bankers have so much power? And that's the situation we are heading towards with 11% inflation projected.
Yes, I think so as well. So let's get to some questions. I thought Justin had a pretty cool one here. Do you look for value in junior miners in Africa? Should I look at energy stocks in South America, or stick to Canada? So you're a great person for this question because I've heard you talk about it before. Like if you don't know something about a country, like don't invest in the gold miners in that country. There's sometimes they get delisted. Sometimes they're running into major regulations. So I'll let you answer this one. So what do you think about this question, Kashab?
So, do I look for value in junior miners in Africa? Yes, absolutely. The only jurisdiction I would avoid is Mali. Mali, Niger, do not go there. Other jurisdictions, yeah, fine. But the riskier the jurisdiction that you're going in, the you should have much more upside than, so let's say you're looking at a company in South Africa or Botswana versus a company in Ethiopia. You should really be paying a discount for an Ethiopian company. And, same if you compare, say, mm, Ghana with any other sub-Saharan nation. So, you should be paying a slightly higher price for a Ghana company. So you should look at factors like that. As for energy stocks in South America, personally, I've not had a good experience with it. I am looking at some stocks in Argentina because they have this big shale basin and they're doing a lot of stuff there. But I'm personally not keen on Colombia, even though I know a lot of people have made money in Colombia. It is just not my forte. I would stick to Canada, and the reason is we are in the early stages of an energy bull market. So I don't even know if it's a bull market yet. So in this stage, you should not be looking at South America. You should be looking at the comfortable stocks, the large caps, companies like Shell or companies like Total, Woodside, Equinor, stocks like that. Or if you are into Canada, then something like CNQ, the big names. There is really no need to go deeper down the chain. But if you're looking at junior miners, then yes, this is the time to pick up cheap stuff in Africa, in LATAM. This is the time to pick up cheap stuff everywhere. So there was this company called Prospector Metals. They had a huge hit in a property in Yukon. So you can buy a stock like, I'm not saying you should buy that stock. You can buy a stock like that and expect to make a lot of money because, this is the time in the cycle where you make money on stocks like that. Energy, I would avoid doing that.
Yeah, I think it's it's a tough one here, which is just understanding like what part of the cycle we're in and understanding like, yeah, I want to be in the biggest, strongest names at the moment. That could change. We're looking at, a few weeks ago, we put out an alert. I can talk about it now since we've had it on for a while, but Baker Hughes was one. Shell's another one. BP even looks decent. So you want to be in these big, almost international names at the moment, and just looking for the strongest stocks inside of these sectors. That's the way you want to start out. If you got to front run it, if you can wait and be patient, like I'm assuming there's probably a lot more money to be made by waiting. Cause it's not because you can't buy something cheap. It's because if you're like Kashab can sit in something and understand it completely for a long time. When you're looking at new traders, they start to get stuck in ranges. Let's say like you bought energy, let's say 6 months ago, like you've sold it already. Let's be honest. Like most people have sold it. Like it's chopped around. It's been messy. It's been very hard to trade. So either, wait for the breakout, buy the strongest names inside of the sector, and buy the big ones at the moment. So let's also talk about fertilizer stocks and potash. So, have you been looking at this sector at all lately?
So Mosaic gave out some somewhat underwhelming guidance, and it's just something I would prefer to avoid right now. Not because there isn't opportunity in potash. So there's a small cap called IPI, Interpret Potash. So you can look at that, and you probably will make money on it. It's just that when I look at the opportunities around me today, there are a ton of opportunities. So, do I want to look at potash or do I want to look at something else? I want to look at something else in a different market. Let's say it's 2022. I would absolutely be buying Nutrien and Mosaic and all these fertilizer stocks, just not today and just not for me. Not saying it will not work for you.
Yeah, I'm torn on the sector at the moment. Um, there are some names in there that are looking interesting, but like I think there's still like we're looking at the cycle playing out the way it is. And what we've talked about before a bunch of times is the fact that gold miners leading the way up over 100%. Then you got metals and mining, XME, 70% I think today. You've got steel stocks; those are moving. You have coal really starting to get off the ground here. Like that's exciting. Like coal has been one that I continue to think is going to be very interesting. I mean, this is always funny to me. Sam always highlights these charts, which is he's really good at. But if you look at coal, they literally listed this thing right at the top. They delisted coal. The old one was KOAL or was it KOL?
I don't remember.
I can't remember either. So the old one was it was coal with a K, and that basically right at the bottom they delisted it, and then coal stocks actually were the best performing sector for a 4-year period of time under Biden, basically. So like we had this crazy move in the coal stocks. So coal stocks were, which is hilarious because people would be like, no, that's impossible. No, energy and coal stocks were leading the way that whole time. And now we're seeing coal really start to take off again. I mean, this is a great trend. My coal watch list, I laughed about this because I went on my coal watch list and it's been like probably, I don't know. I don't trade the individual stocks much, so it's been a long time. So I go through there, I'm looking at the individual stocks, and like probably I want to say 60% of them were delisted. Like so it's like at a certain point you run into supply situations where there's just no supply, nobody's producing coal anymore, and you get these explosive moves that happen when you start to see a bunch of new stocks get listed or maybe a new coal ETF get listed. Like that's when things might be getting frothy, but at the moment it's like there's probably a ton of upside in coal. I think that's a place where another area where you want to be, and I'd rather be in that than fertilizer stocks at the moment. It's good to look at what's next, though, Justin. Like I continue to think like that should be on everybody's radar. Continue to look at those sectors, but I do think coal for me is going to be the one I would rather be in at the moment. Lithium also looks great. So if we look at lit, that one's Global Lithium Miners. I mean, that's pretty ridiculous move. If we go back, to that move that's crazy to actually see. That move that happened from 2020 all the way into 2022, that was a huge, massive move. I mean, what was the percentage on this? We have 422% in an ETF. So that's pretty wild. So we got this massive move in the battery metals. So I think that a new move there might just be getting started, another area to look at. But I would rather look at lithium. I'd rather look at coal if you're looking for what's next. But I do think also energy will probably catch up at some point. But when energy starts to catch up, I think that's when we'll see potash catch up as well. Don't know if we had any more questions here. If I'm missing a question, somebody just say it at the bottom.
Thoughts on nickel and copper? That's one.
Thoughts on nickel and copper. Okay, let's talk about that. So, where's that at? Oh, there we go. So, yeah, so just my thoughts on nickel. one is I trade on the LME again. I'm not a big fan of the LME. Kashop already knows the story without me talking about it, but I was very pissed off in 2022. And the reason why I was pissed off in 2022 was I I made a good amount of money Q1. I would have made a ridiculous amount of money in Q1 if the LME didn't just give me my trades back, basically. So the LME, I think it was nickel, lead, and something else. I can't even remember. But they basically cut all of my trades in these products. So they were just like, okay, here are your futures contracts. Like, I'm glad you got that right. That's cool. But they literally just gave me back basically gave me my trade back. So it'd be like if you made like, 120% in a futures contract, which is like a ridiculous amount of money because you have leverage. And then basically they go, hey, you didn't make 120%. Actually, you made zero. Sorry about that. Sorry about your luck. And the LME's been kind of known for doing stuff like this. So I didn't trade on the LME for probably 2 years after this. But I do think the LME is probably a good place to trade. I just don't like that's always going to leave a nasty taste in my mouth. It's one thing to be like, hey, we're going to close your trades. That's fine. But just, hey, we're gonna give you we're gonna take your return back. That's fucked up. And in 3 different products all at once, that was really fucked up. But looking at copper though, I do think copper's still a great one. If you look at it globally, like if you look at copper like on the LME, actually you look at copper in other areas besides the United States, it doesn't look as bad as this chart. But I mean, if you guys remember, the day that happened, I did post this chart, and the chart was 425 is the level that I would say the trend is broken. It basically bottomed out that day on the news and just started chopping higher, and now it's moved higher pretty quickly. Now we're over $5, 5.11 at the moment in copper. I think copper over $5 is very constructive of the whole copper sector. The copper miners never gave anything back. That was very exciting. If you look at names, we have some international copper names. This is copper and gold miners, but this is one that is a good one in the sector that I definitely like, which is BVN. Kashop mentioned SCCO on here a couple weeks ago. So we look at Southern Copper. That's another one that looks really good. I think, yeah, I had this on a monthly chart. So that's another one that looks good, continues to make new highs. The sector, CopX, Global Copper Miners, that looks great. So big moves continue to happen in this sector. Like we're getting right near those old highs that happened in, what's that, 2011, basically with all the mining stocks. So we're good. Oh, actually, we're right above those highs. So if we get a weekly close up here, that's a weekly close at a new all-time high. That's pretty exciting. So copper miners could make another big move here and possibly not look back. So I like copper. I like nickel. I like lead. I basically like anything that's commodity related at the moment, hard assets, but I just wait for buy signals on all of them. Obviously, copper's been in a buy signal. The copper miners have been in a buy signal. But nickel might need a little bit more time, but it already looks good. There are some buy signals in that as well. I don't recommend those anymore just because I don't want that to happen to somebody else on my watch. So I don't talk about it much. I used to talk about nickel, lead, and all the commodities quite a bit more, but now I'm just like certain ones. It's so illiquid that I just don't want people getting into certain things. Palladium, great if you know enough about trading. Awesome, get into palladium futures. But if you don't know a ton about trading, the contracts are big. They're very illiquid. They make huge moves very quickly. And if you get in the wrong contract, you could lose all your money just by putting your money in the wrong contract. So things like that I kind of stay away from. But there are some nickel miners out there. So Kashop, if you know any nickel miners, feel free to name them because I do not. I've never traded any of
And
them.
there's Norilsk in Russia.
What's the
Other
ticker?
than that, Norilsk in Russia.
Is it even listed
So
anymore? Probably not.
I don't know.
Yeah.
Probably not. There are a couple of small cap Canadian stocks, but they're not miners. They are explorers. So there's something called CNC. Canada Nickel Company, and then what's the other one? Then there's FPX Nickel.
Oh, I
So
don't
those
even.
are two stocks. Yeah,
Yeah, I
Canada Nickel Company, and no, that's a different one.
can't. Oh, there it is. All right.
Yeah.
So there's
And there's
Canada Nickel. So that is actually starting. That is actually a base.
yeah,
Not a long-term base, but it's a short-term base. But if you wanted to buy something like this, getting over 76 cents could be big. And not to mention, like, these things really move. Like, these
yeah,
things can make some big moves pretty quickly. Like, this was after 2020. So I wouldn't doubt that this thing could probably make a big move, especially in this environment. It's the perfect environment to start owning things like this. So that's a name that you guys can get today. We have been trying to put out a trade idea once a week. We could say that's one.
yeah.
But once again, it's a very small stock. It's going to be very volatile. That's a very speculative bet. So just be ready for that. We try to recommend big names here on the show, at least, just so nobody gets hurt. But I still like the idea of copper miners. I still think copper miners are probably a way to go. One I haven't looked at in a while, FCX. It is in the portfolio from the reversion model, but I haven't looked at FCX in a while. I know they got hit really badly. So what happened when they got hit really badly? I know something happened with one of their mines or something. Can you go elaborate a little bit more on
Yeah.
that, Chop?
Yeah, so FCX was in the portfolio for a long time, so I didn't talk about it. I just sold out last week for a 45% gain. And what happened was a month back, they said there was a ore spill, kind of like wet material spilled from one of their mining blocks at the Grasberg mine in Indonesia, which is among the world's biggest mines. And that spill went into one of their development zones. And they said, 7 workers were trapped underground, but they are safe, is what they mentioned at that time. And since then, it just got worse and worse. So first, the miners, they died, and then the spill became such a severe problem for them that they had to cut their production guidance for 2025 and 2026. So it was one block among all the one among many mining blocks. But that spill damaged the underground infrastructure, and it's up in the air still. So we don't really know when it'll get resolved. So I saw the stock go down, and then once it bounced back up, I was like, I had a 54% gain at my peak, and then I sold it for a 45% gain. So I just got out. And here's the thing, like, Freeport is good value, but if you're looking at copper stocks right now and you want a large cap, between Freeport and Southern Copper, you should just go with Southern Copper. The reason being, a bad situation can get worse. And even if it doesn't get worse, you never know how investors are going to react. So, yes, you're going to see some value guys circling in, but you're going to see the momentum guys go out. And if you look at Southern Copper, the value guys are in, the momentum guys are in, everyone who's looking for copper exposure is in. So, in this situation, why would you own Freeport when you can own Southern Copper? So that's the situation, and it's the same way. So this these problems happened with First Quantum in 2023, Ivanhoe Mines earlier this year, and what you should do in those situations is you should just forget about these stocks for a while, let them get absolutely destroyed, go nowhere, whatever, and then you should buy into that once it bottoms. So that's pretty much. So Hudbay is a stock in the portfolio. I'm up over 100% on it. Taseko is another stock in the portfolio. Once again, I'm up over 100% on it. And what I did was I just waited for that bottom, and then I bought in, and I just waited patiently. So that's my playbook. I mean, you can have a different playbook, but that's the way I play copper or any mining stock in general.
Yeah, I think it's this is also my portfolio as well. The different trading style from Gashop is basically I bought a 52-week high in this. And so, like, it's a similar return. It's just figuring out how you do it. Like, I think the biggest thing that I think Kashop and I both have in common, why we trade very well. Somebody asked about the process of trading strategies. Well, it all starts with really understanding the environment. If we understand the environment, then we can kind of go from there and go, okay, well, if you're a value guy and you're finding this crazy pullback or a low volatility zone, Shop likes to buy a little bit of both of those, and you get this low volatility zone and you go, hey, I'm kind of interested in this stock. And the environment looks good, I'm seeing gold moving and so on. You might get interested and start to buy something like this. And so basically, it's all about understanding the macro environment. And that's what we do here on the show. That's why it's called the Holy Macro Show. We understand the macro environment. From there, we can understand which commodities and sectors are going to move. We look at copper. Okay, copper's moving, made a new 52-week high last year, went back down, but started chopping around, went back up again. Then the copper miners all started to really take off. We can start to participate in these sectors, understanding like, it's not about like growth in the United States, because everybody goes, Dr. Copper, Jason, stop talking about growth. And I'm like, my whole model is global. Like if we're looking at emerging markets, we're seeing a lot of growth. When we see emerging market growth, we usually see copper doing well. That's important. So emerging markets are growing, which is telling us that we can be in something like copper. And this is how we're going to take these trades. So I think whether you're looking at, gold miners, same kind of idea. We're looking at monetary debasement. We're seeing gold starting to move. We're seeing the miners moving, which is confirming that, gold will continue to move. If you're looking at international markets and we look at the macro and go, oh, wow, emerging markets are projected to grow. I think it was at like 5% this year. And the US was at like 1.8. And it was okay, well, that's interesting. And then I might go the next part, which is, okay, I'm looking at the charts. Okay, well, how's the sector look? Okay, well, we're seeing relative strength in the sector at the beginning of this year. We're seeing China started last year. Actually, China was an outperformer. And then into this year, we started to see names like Poland and Greece and things that you just don't see moving, starting to move really well. The European banks started to move really well. Deutsche Bank was the best bank on the market for a while, return wise, which is something I would never say, but that was really happening. So then we're seeing, okay, well, we're seeing this global trade start to take shape. So that's the best way we can, what we do here well is understanding that process of things and then getting into the trades and really hanging on to them as they move. I know we made a video on this. I can't remember the
It was the
title.
last one. It was the last one. We talked about it last
No,
week.
we talked about, we went really in depth on strategies though. Probably a month or two ago. I can't remember the name of that one. If I find it, I'll put it in the comments. If somebody is listening to this and they want to remind me, because I will probably forget, feel free to say something in the comments and just say, hey, you said you were going to dig up that video, and then I'll dig it up. But I'm going to make a little note here and try to dig it up now. So we're going to hop. Shop, do you have anything else you'd want to add?
Yeah, before you hop off, can we get your thoughts on gasoline?
Ooh, gasoline.
Looks
So
at a pretty critical level, and I know you follow this more closely than I do.
yeah, so gasoline looks terrible. And then if we look at, let's look at weekly. Heating oil. Heating oil is another one. Now it's starting to look terrible as well. So if we're looking at, these markets, I think the biggest thing to me is, one, I'm not saying to buy oil. Like that's a thing that I feel like people have missed, that I've been trying to say. Like, I'm not saying to buy oil. I'm saying keep it on your radar. It's same with fertilizer stocks. Keep them on your radar. Something's gonna probably happen at some point soon. The biggest thing I see here is the fact that everybody continues to think that we're not going to see, like Saudi Arabia think at a certain point, like, hey, my economy is not going to do very well if oil prices continue to move lower. Like OPEC keeps saying they're going to loosen supply. However, they can't just raise production. So I feel like a lot of these shocks are very short-lived because of that. I think heating oil just sustaining where it's been compared to oil, compared to gasoline, is something that's significant. Not significant enough to go crazy and buy a bunch of it, but it is significant enough to pay attention. I think here it's a good time to just continue to watch the energy stocks. I think really, if you want to buy this sector and you really are serious about it, I think you really wait till we get above that 101 level. If you look at the monthly chart, you're seeing we've been stuck under that zone for a long time. It keeps hitting its head on resistance and it keeps turning back down. I do think that this is going to happen at some point. However, it's not happening today. And I think the one thing that's significant is if you look at something like, the past cycles. If I ever seen a cycle, and I had to find individual stocks as ETFs didn't go back as far as I needed to go. And so if you go through the individual stocks for all of these miners, whatever you're looking at, whether it's copper, steel, lithium, you name it, coal, uranium, I have never seen a cycle where all the sectors I just listed are moving and energy is not. Now people I'm sure people will write in and say, hey, Jason, it's a different world and solar energy and all this stuff. At the same time, the EIA just said we need to put, what did they say, like a couple 20 trillion in investment in oil before 2050. Because we're going to need it till then. So they rolled their Project 2030 idea, and now it's going back to 2050 and saying we need more oil and we need to start searching for oil immediately. I think that's probably a good sense of what's going to happen in the future. So I do think that this is going to catch up. I do think that the energy sector will catch up. Is it ready to buy now? Absolutely not. It will be soon, though. I would assume by year end, we'll start to see buy signals in energy. I assume by year end, we'll start to see oil get above 70, 75, possibly 80. And then this trade will really take off. But I think the seasonality this is the thing that's always interesting about seasonality. It's so different than what people think. So when people look at seasonality, people go, oil, energy does its best in the summer months. That's not true. The sector does its best usually in the winter months. People think in the summer months, which makes sense, which are more people are driving. However, because they know more people are driving, they're going to produce more oil. And most of the time, oil doesn't do its best work in the summer months and even in the fall months a little bit because people are driving to school. You'd think maybe oil would go up then. It really does its best during December, January, February, March. You see these big moves in that sector. So I think that that's probably coming our way. I just think we got to be patient here. I don't want to front run this trade too much. Buying some strong stocks in the sector, fine. But, going all in on oil, going all in on gasoline, heating oil, take some starter positions if you really need to. But I wouldn't go any further than that.
Yeah, I think I totally agree with you. In fact, I have a initiation report on an oil company, but I haven't yet pulled the trigger, so I'm
Yeah.
still waiting. And I think that's the way to play it for now.
Yeah, I think it's something you want on your radar. Like, right, you want it, or set a buy stop. If it gets above this level, I'll buy it. But for now, this thing's just moving sideways. It's really frustrating. At the end of the day, it's more of, can you handle the volatility for the next who knows how long? And if the answer is no, just wait for a breakout. Like, what are we really waiting for here? Like if we're looking at, this getting above 101, like, oh no, you missed out on a 10% move. Like, we're not looking for a 10% move here. I'm looking for this thing to really take off and probably make a, next year possibly a 70% to 100% year. That's what I think will probably happen to the energy sector. So I'm good waiting. And you can be wrong and be in cash. Like, that's the thing. Like, you can put together the whole thesis. Hey, this makes sense. There's all these reasons why this should work. And at the end of the day, you should always know the market loves to make a fool out of the most people most of the time. And so if we're sitting there and going, this should work, I think this should work, and possibly for the first time in history, I'm wrong, and we get to, I'm not saying for the first time I'm wrong, I've been wrong many times, but for the first time in history that all these sectors are moving, and the energy sector doesn't. I wouldn't make that bet. It's the lowest probability bet, but I am saying like anything's possible. But if you're sitting in cash, it just doesn't matter. So I'd be ready to buy that breakout. I'd go to a full position at that point and sit on my hands in the meantime.
Yeah, I think we can wrap it up with that.
All right,
It's
sounds
been
good.
it's been a good show. Thanks for all the questions, guys.
Yeah, thanks for writing in, guys. We'd love to hear from you. If you guys have any more questions, drop them in the comments. You guys want the charts from today, let me know. Drop them in the comments. Basically, if you sign up for Against All Odds Research, which is in the description, I send the chart decks to people, so you can get the chart decks for free. So sign up for Against All Odds Research. I'll see your email within the next hour, because I can't look at it all for the rest of my life, but within the next hour, and I'll send you the charts from today and all the news articles, whatever you guys want. And we'll see you guys next week on Friday. Same time, same place, 10 a.m. Eastern time. See you guys later.
Bye, everyone.